Hey everyone, it's Rob Folia with Folia Properties at Keller Williams Realty. It is March 1st here, 2023, and just wanted to come to y'all live today and share what's happening in our real estate market, in our real estate world. We have some up-to-date statistics to go over and to take a look at here, just so we can get an idea of what's happening in the world of real estate. So if you're seeing this, and just know that the real estate market is moving pretty quickly. So if you're seeing this even if it's still March 2023, but if it's March 15th, 2023, reach out with questions, reach out so you can get some up-to-date information, because things are changing pretty rapidly. And in fact, let's just start with one of the things that's making the market change as rapidly as it has over the last 12 months, and that's interest rates. You can see right here, this is straight from the Freddie Mac website. Freddie Mac they report interest rates every single Thursday, so we'll actually have some up-to-date numbers tomorrow. However, they ticked up last week, and they're still hovering in the mid sixes. You can see 6.5% was the average for last week. That was a pretty substantial jump here. This just over in February. I mean, you can see it bottomed out in the low sixes, almost up 0.5%. You might be wondering, what does this mean to me, Rob? Why should I care about what interest rates are doing right now? The reason I share this is if you're a home buyer, or just maybe you're a homeowner and you're thinking about refinancing, or you're thinking about selling a home to buy something else, for every 1% that interest rates fluctuate and change, then that simply means that it's going to affect your buying power, or it's basically going to affect your buying power by 10%. It's going to make when rates go up, it's going to make homes less affordable. It's going to make them cost more. And it's usually by about 10%, meaning like roughly say a $500,000 home at 6.5% is going to cost somebody roughly the same. I say roughly, usually within a few dollars, the same as say a $450,000 home at 7.5%, or a $550,000 home at 5.5%. And when prices aren't fluctuating as quickly as interest rates, it does impact what the future might look like for you as a home buyer, as a homeowner. And so again, just wanted to share that with y'all so you have an idea of what that might look like. The other thing that I wanted to just dive into and take a look at with you here is just what's happening in our local market here in the greater Nashville area. And so I just got Davidson County pulled up here, and we're looking at the median sales price, because in fact, I was talking with one of my clients recently who had said that he thought that that people are asking basically the peak prices, that pricing right now is higher than it even was when it peaked last year in the spring. And you can see right here what I've got pulled up is a trend line for the last 3+ years, basically going back to the beginning of 2020, a monthly trend line for what the median sales price was in Davidson County. You can see it kind of peaked right here last spring, May of 2022. This was a drastic increase at the beginning of 2022. I mean, you can see here, January 2022, $400,000 up to May 2022, 474. Gosh, that's just doing the mental math, roughly a 20%, almost a 20% increase in 5 months. That was not sustainable. And honestly, it's probably a good thing that interest rates went down, because the reality was there are some people that paid a lot for homes in the spring of 2022. And we're starting to see it level out and normalize right now. So just looking at what the final numbers look like for February, the median sales price for Davidson County, $429,000. Compare it to last February, $425,000. It's basically even. That's a good thing right here, actually. I know some homeowners might think, gosh, my value's not going up as much as it was. The real estate market shouldn't be like the stock market. It shouldn't look like this either, with how quickly things have gone up and down with mortgage rates. It should look relatively stable. Like, in fact, if we look back even at just say going back 5 years, you can see how, yes, there's ups and downs because we're looking at it monthly and there's seasonality and all that. However, you can see right here in 2022, there's this giant peak. That's not normal, and we don't want to see that. And so the reality is, seeing this right here, that's a good sign, showing that the market's kind of normalizing, up 0.9% year over year. That's a good thing right there. I wouldn't be surprised over the next couple of months if year over year trends are down, and at the same time this line is still going up. So meaning, obviously no one knows what the number is going to look like for March of 2023 yet. At the same time, wouldn't be surprised if it was in the low 430s. Maybe also just a little bit of an increase compared to February here. The same trend line kind of continuing. If you look at March of last year, it was 445. If it was in the 430s, that would be a negative trend year over year. not a bad thing, because again, this was such a drastic increase. It needed to normalize a little bit. So just throwing that out there, don't lose your head. Don't think that the market's crashing if that's the case. And in fact, one reason why it's not crashing right here is inventory. So what we're looking at right here is months of supply. Months of supply is just a real estate statistic that basically shows a balance between the amount of homes for sale and the amount of buyers out there. Because if you think about it, we know how many homes are for sale. They're in the MLS. We can calculate that. And yet, how do we know how many buyers are out there? We technically don't, because everybody could be a buyer, but who's qualified, who can buy, etc. So what we use is basically we use a formula here, months of supply, to show how quickly homes have been selling. And we weigh that with the amount of homes that are out there. So that's months of supply. 2.5 months of supply. You can see it is an increase over last year, which is a good thing, because last year was kind of an all-time low. If you look back again, I'll just go back at the max. This month's of supply at 1.6 months in February of 2022. That's the lowest that we had ever seen. We don't want to see that. That's what was causing that rapid appreciation, that rapid inflation, that 20% increase of home values in 5 months, or whatever we were just looking at. 2.5 is still really low. 2.5 historically, if you look here, I mean, even just look at some of these bottoms. That's 2017. That's 28, a little lower than 2018. Definitely lower than 2019. My point of bringing this up is that what we're entering, the market that we're in right now, is very similar. In fact, I'm just the clients I'm working with right now, it's reminiscent to me of 2017, 2018, meaning say a buyer client. If there's a home that's out there that we like, let's take action on it right away. Let's get out there and and if we like it, let's write an offer. Let's write a strong offer and hopefully beat other people with a punch, because there are still some multiple offer scenarios out there. However, if we can take quick, decisive action, we can get you into a home without having to do what was necessary last year, of that going insanely above asking price and all that. So that's a good thing. It's a good sign. On the flip side of that, though, as a seller, homes are selling quickly again. Still, that hasn't really changed. Now, granted, it's not what it was the beginning of last year. That was an anomaly. That was hopefully something we never see again. Gosh, I'm thinking of one listing I had right around this time last year that was a fine home, a lovely home, and at the same time, it garnered about 20 offers, and it shouldn't have had that. It was priced where it should have been. It wasn't underpriced, and it sold for about 20% above asking, and it shouldn't have sold for that. And so my point being that this is everything I'm seeing so far. It's showing that the market is normalizing. It's getting back to what we want it to look like and what we want it to be, and that's a good thing. I'll probably cut it off about here when it comes to stats. I'll pull up a couple other counties just so you can see it's not just Davidson. Rutherford County, for instance, here, 2.2 months of supply. Again, it's not what it was last year, one month in February of 2022. But again, that's a good thing, because 2.2 months is showing us that it's getting back to basically here, 2.1 months in February of 2018. February of 17, it was 1.9. So it's a little above what it was right there. That's a good thing. It's not getting into balanced market territory at all yet. Maybe by the end of this year, maybe next year, who knows? I mean, we'll see what ends up happening. Again, real estate is an interesting industry, because it's an interesting economy, because the reality is it's all about supply and demand, and we'll have to see how supply and demand, how they continue to interact in this new world of interest rates that are in the sixes and are kind of fluctuating relatively quickly right now. Just to show you all sales price too, median sales price here in Rutherford County. Just picked Rutherford. You can see it's actually down year over year. It's kind of what I was saying before, in terms of I wouldn't be surprised to see a negative year over year trend as we're looking at things. And yet that's not a bad thing. When we see how it, just going back to November of 21 all the way to this peak here of July of 22, 365 to 440. Somebody help me with the mental math. That's roughly 20%, isn't it? I mean, if that's 25% maybe, because 25% of a quarter of 365 is 90,000. So that would put us right around 350 and 450. Anyway, my point being, it's a 20 to 25% increase in 6 months. We shouldn't have seen that. And so it's a good thing that it's kind of normalizing. We are seeing it increase. I wouldn't be surprised to keep seeing subtle increases just month to month, while the year over year trend shows a negative. Again, that's not a bad thing. That just simply shows us that things are normalizing. The market's getting used to some things. In fact, it's probably showing us, if anything, that buyers are getting used to this, that buyers are getting used to interest rates being what they are, how they're in the sixes. And, just word of advice for any home buyers that are out there, anybody thinking of refinancing, anybody thinking of selling their home and buying Guys, work with what rates are today. We don't know what they're going to be like in 30 days. We don't know what they're going to be like in 6 months. Any expert that's out there that tells you they know what that they know what these rates are going to be, they're blowing air, they're blowing hot air, they're blowing smoke. They don't know. It's just the reality of it. I was talking with somebody. I heard somebody say it just a few weeks ago. They thought rates this year were going to drop back into the 4s and 5s. Who knows? They might also be in the 14s or 15s. Hopefully that's not the case. I'm exaggerating there. My point being that, there's nothing here that's showing 4 to 5%, for an interest rate. I would love them to be in the 4 to 5%. And so make your financial decisions as how things sit today. There's no guarantee that rates are going to be 4% or 5% anytime soon. Make sure you can afford whatever it is that you're wanting to do with whatever rate you're getting. If it's 6.5%, like Freddie Mac's reporting on their most up-to-date numbers here on their website, if it's that, if it's something else, just make sure the numbers work for you financially. Because if they do, fantastic. Then it should make sense. And make sure then everything obviously make sense for your life. And at the same time, my point is just make sure that you're making decisions based on how things are today, not what somebody's projecting them to be in the future, because that's speculation. We don't know what speculation will look like. I will cut things off right there, but I appreciate y'all tuning in as always. If there's anything y'all need, reach out. I'm here to help. You can find us on our socials at Folia Properties. You can email us info@foliaproperties.com. Appreciate it, y'all. And until next time, we'll talk soon. Thank you.